Happy Wednesday to you. Welcome back to the live. Good one, Ollie. Welcome back to the live trading room. Got a little bit of a slow day today, not too much in the market. So if you're someone who is watching on the live stream, either TradingView or YouTube, and you have a specific pair or asset you want me to take a look at, let me know. I don't mind bouncing over there. We can do a little bit of a viewer's choice. Just type it in and we'll get to it. If not, I'll pick something from my list. But slow day. We've got a Fed day today. We've got some minutes coming out from the FOMC at 2 p.m. today. These are going to be minutes from the last meeting in June. So the market is going to be paying close attention to that as everyone is kind of fearful across the world and concerned and wondering about what's going to happen next. So if you're new, typically before quote unquote major news events, even though this one isn't really in the major category because there's no press conferences, just a recap of the minutes, but you see the markets kind of stall. You combine that with the fact that it is summer. We're getting into July, or we are in July, the dog days of summer, and we just got some slow markets. So we'll do our best. We'll go around. Did have a losing trade yesterday. Canada got me. I'll tell you what's funny about Canada. I don't have Ninja up right now, right? We talked about Canada and the overlapping levels of structure. I don't know if you guys saw the trade, but exactly what we talked about happened. This is why I don't like trading overlapping levels of structure, right? Canada, real quick, going back to it, we had a bear Gartley pattern yesterday that looked like this. X to A, completed more like a bat, but was a Gartley X to A. And again, YouTubers, trading viewers, we're doing a viewer's choice day today. So if you have a pair you want me to take a look at, just shoot it in. I'll try to stall as much as I can. But we had a bear bat that looked like this, and we had overlapping levels of structure, meaning that the level that we place our stop above is our X leg, but we also had that higher VS1 level on our ninja charts, if you remember, right here. And I always talk about overlapping levels of structure. One of the reasons I don't like trading at overlapping levels of structure is because the furthest level is often tested. It's always hard to get a good stop placement. Because of that, lo and behold, we did exactly that. We came up, pinged that upper level of structure, and then came back down, stopping me out in the process. So stinks for you, Canada. Tony made it Tony was on the other side of this trade, for you guys that know Tony on the platform. So he had a lot of words for me and smiley and laughing emoji. So good for him. At least one of us made some money off of it. But that was my loss from yesterday. All right. Nothing came in from the live streamer. So let me pick something that I think will be interesting for you. Again, there's not too much out there. We did euro dollar yesterday. That TCT is still on the table. We got euro yen falling channel. Euro Aussie trend continuation. Let's go euro yen. We'll do the euro yen falling channel. Yep. Oh nope. Real quick, I take it back. Wait a minute, real quick. Canada yen. I'm short from yesterday. Lower low, lower close candle on the 4 hour. Nice. Is that something you want to take a look at, or just wanted to keep us updated on Canada yen before we hop into our trade of the day? And if you guys are new, for you guys in the live stream, this is a live room I do over at Tier 1 Trading. What we've been doing is we've been live streaming kind of the first trading idea of the day for you guys to check out and participate, since everyone doesn't have the chance to join us. But if you ever do want to join us live, head over to our website, sign up, get inside the live room, and we've got a London session and a New York session. You can come in and join the party for some good lessons, some good discussions. Oliver says, Akil, I would love to hear your IPD on pound yen. I would like to hear how you'd go over this pair if you can, please. Sure. We will do that. I'll do two of them. I'll do Canada yen first for our live stream, and then I'll do pound yen for you guys afterwards, if that's fine. Oliver, did you have a specific time frame or time frames you wanted me to address it on? Like, did you want me to do daily, 4 hour, hourly 15, 5 minute? Just let me know what kind of, if you're looking day trading, swing trading, or just how I would personally do it. Daily? Okay. All right, let's head over to Canada yen. And again, Our trader said Canada yen, he's short from yesterday, lower low, lower close candle on the 4-hour time frame. Can you take a look at this? Curious on your thoughts. I'm looking for lower targets. I see there's a bull bat on the daily time frame. Could be an advanced pattern for your live room as well. Then real quick, Fabio says Euro Canada did quite a nice swing today, but did not get enough risk reward on my entry. Yes, that is the worst. We talk about and different elements of a trade. And I think so many traders don't realize how much has to go into a trade for a trade to actually be a good trade. It's not just the trading scenario, right? It's not just the location and the timing, which is very important, but it is also the other elements like risk reward. And the reality of trading is, right, the majority of the time you're going to do your analysis and you're going to see parts of what you need, but not all of what you need. And the ones that stink is when you get all of what you need, but you miss out on one thing, where it's like you get everything that's perfect except for your entry reason. Or you get everything that's perfect except for your risk reward. And those stink because we know good trading opportunities don't come too often. But this is what we talked about in the Trading Edge video, right? As you evolve as a trader, this is why I think you always want to evolve. You always want to add more tools to your arsenal, right? Yes, and you followed your rules by not getting in, and that's what matters most importantly. But as you add more tools to your arsenal, what you're doing is, and I was talking to Stuart about this yesterday on the chat over on our website about kind of post-market review, post-market analysis. You understand that good trades don't happen too often, right? I think we'll kind of get there. So the goal ends up being, how can I put myself in a position where I'm flexible in my ability to get involved in those good trades? And that is, adding different reasons to get involved, different techniques, different tactics, stuff like that, that fit into that general premise. And that's what a lot of traders end up doing as they evolve. All right. But it is a good trade not to take a bad trade. It is a good trade not to take a bad trade. All right. So let's look at Canada yen. Sorry. And we're doing some shorts from yesterday, 4-hour time frame, lower low, lower close candle. Let's first start on Canada yen on the daily, gain some perspective. Not a pair in my regular rotation, but we have looked at this before. It's in my secondary list. And I got some lines on here, meaning that we are at a previous level of structure. Now, we've broken and closed above this recent level of structure. My guess is there's something else that is hidden back in time. Yep, our higher level of structure cluster back here in 2008 as well. So again, another example of those overlapping levels of structure. So we are at a previous level of structure resistance. And then we head down to the 4-hour. Our trader got involved at a lower low, lower close yesterday. So maybe right here, I'm guessing, this candle. There's a little bit of a delay on YouTube, but my guess would be this candle right here. Maybe not. We'll see if he types it in. And he's looking for a continuation lower. So right now we're trading at a previous level of structure support, right? We've rallied down. We've come down to a previous level of structure support. We do have an advanced pattern that has formed here. It looks like it's going to be a Gartley. Let's look at swing low to swing high. That's going to be our X to A. Our A to B comes past our 618 retracement, but does not touch our 786. So this is going to be a potential Gartley pattern. And the completion for that Gartley is going to be at our 127 extension. So we're looking at an X to A, our first leg, A to B, our second leg, B to C, our failed extension, and then C to D right at the very lows right here. So this is the deepest, not the deepest, but close to the deepest possible Gartley pattern that you can get here. Now, that is a buying reason in its own right, although we've already violated the X leg per how I trade Gartley, so I wouldn't be interested in it, but we did not have a break and a close, and you got to define what your version of violation is it a break and a close or just a break? But that could be a buying entry right there as well. As far as a continuation lower, because I do remember you asking about that, what I would need to see is a violation of structure, right? I would need to see a violation of structure. So if you're new to my philosophy on trading, right, make sure you watch my YouTube videos first and foremost, and make sure you check out the free stuff we have on the website. That'll explain it pretty quickly. But I am basically a structure trader, meaning structure is the centerpiece of my trading philosophy. So everything I do is based around structure. And if I were to kind of simplify my trading style, right, this is the most, I am gifted with the skill of being able to simplify stuff. Didn't really work in school for me. Teachers didn't really like it, but it's worked well in the financial markets for me. Basically, it's like this. I believe that structure acts like a magnet, right? Structure acts like a magnet in the sense that price is either pulled towards it or it's pushed away from it. So our idea or our goal as traders is to identify the current level of structure, excuse me, be able to recognize what the result is at this structure, and be able to predict the next part. And push, I'll explain in a second with the Gartley. So let's say we're trading at this level of structure. This would be called a decision point, where the market is going left and right and blah, 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 doing nothing here, right? It's basically this, right? If we break to the upside, right, that gives us a higher high, higher close. My prediction is that we will gravitate towards the next level of structure. If we break to the downside, my prediction is that we'll gravitate to the lower level of structure down here. This is pretty much the most simplified version of how my trading works. Now, obviously, it's a little bit more complicated in finding opportunities and measuring risk reward and all that fun stuff. But as far as the prediction part goes, right, identify levels of structure, be able to identify what price action is doing at current structure, and then make your next target location at the next relevant level of structure. Now, I'm not saying that structure is easy to identify, right? There are minor levels and major levels and inside levels and outside levels and all that fun stuff. But the general premise is that price will gravitate towards structure. Structure is proven to be kind of key areas in the market between the buying and selling habits. Now, real quick, Push says, Coach, would you be able to explain why you won't take this trade as a Gartley? Yes. So this is an invalid Gartley for me because price has pushed beyond the X leg. So you see our X leg right here, price has pushed beyond it. So if I was someone that was late to this trade, I could not take it because it has technically been invalidated per my rules. Yep. Now, you take someone like Jason Greystone, and correct me if I'm wrong, but I believe Jason Greystone requires, there you go, say it right way, requires a break and a close below. So if your rules require a break and a close below, then this is not violated for you, right? And again, that goes back to the beauty of having rules, right? Well, how do I know if it's violated or not? Well, what do your rules say? Well, look to your rulebook Akil. Violation for Gartley patterns means price pushes past the extreme of X. All right, did we do that? Yes. If your rules say price must break and close beyond the extreme of X, did we do that? No. There's your answer. If 99.9% of your questions can't be answered by your trading plan and the rules within your trading plan, it means you need to go back and revisit your trading plan. So real quick, I got some questions coming in as well. Someone said there's a bear crab type 2 return as well. Not familiar with crabs. I'm familiar with the pattern, not the rules that make it up. But you can check out a bear crab pattern there as well. Bear crab is usually a broken Gartley. Deep Gartley. I have my limit order for targets at the Gartley D completion at that level yesterday and came within 2 pips of that limit order. Like, seriously, I moved it up to 10 pips and went to bed. Why'd you move it up? Why'd you move it up? Or I should ask this, was it in your rules to move your targets up? Because it looks like you just sacrificed 10 pips. Price came down and hit your initial target. So unless there was a rule that said you're allowed to do it, but it sounded like a fear-based decision. But unless there's like a management rule, you got to stick to it. It's in my rules. It's in. So what do your rules exactly say? Pop quiz. When are you allowed to move targets up 10 pips? When what happens? Real quick on TradingView, can you show trading pattern on US gold? Please request gold trading now. I would like to see some live. Nah, sorry, we've already established our idea for today. I can tell you, I looked at gold this morning. There's nothing that I'm personally interested in gold, so I wouldn't really have much to tell you anyway on gold. But sorry, you just came in a little bit late yet. All right, yeah, you didn't tell me your rules. You still got 190 plus pips. I don't care how many pips you got. What's your rules for breaking your rules, or what's your rule for moving your stop loss, limit order? Excuse me, your targets. Right, process over outcome. Right. I don't want to hear the defense. Yeah, but I still got 190 pips. Right. This was the same conversation we had in the Trading Edge video. Right. Why did you move your stop loss or I keep saying stop loss. Why did you move your targets? Was it fear-based or was it something within your rules? You already told me it was something within your rules, but what do your rules say? Management rule, only when that type of scenario happens, you know it was 2 pips shy. So what are tell me the rule. What is the exact rule? Phrase it in an if-then syntax, if you would. I want the exact rule. I want to hear what the exact rule is. Imagine I was trading your plan and I need to know when to move targets. What is the exact rule? Yeah, there's a delay. I'll wait. I am patient. I know there's a delay. I just want to hear. I just want to make sure there's a rule here. You guys know how I get down. As a coach, I don't really care what you guys are doing. Obviously, I want to make sure if I'm working with you as a client, I want to make sure you're not doing anything totally wrong. But the idea is that there's so much flexibility in trading that you can essentially do whatever you want. The key is you got to do whatever you want within an established rule base, because that rule base is what's going to keep you consistent, right? There was a study done years ago by FXCM. It was done by, I think it was Daily Forex, actually using data from FXCM. And believe it or not, it came out that the majority of traders, and we know that 90% of traders fail, the majority of traders won more than they lost, right? Would you guys have guessed that? If I told you the majority of traders, I'm talking all traders, not like professional traders, all traders, the majority of traders won more than they lost. So ask yourself this question. If the majority of traders win more than they lose, and 90% of traders essentially go broke or go to the point where they don't trade anymore, how is that possible? How can you win more than, how can the majority of traders, so over 50% of traders win more than they lose, but over 90% of traders blow everything? How does that happen? Well, it happens by self-sabotage. It happens by entering trades too early, entering trades too late, early target taking, moving stops back, right? So that's why it's so key that we don't focus on the individual trade, individual result of any trade, win or loss. We focus on the process. We focus on doing things the right way. We focus on building and discovering our edge and then consistently exploiting it or extracting it from the market day in and day out. And again, sabotages, I've been watching Stranger Things, right? Sabotages don't seem big at first, right? It's only 10 pips, right? I still got 190 pips. What's the big deal? And everyone would agree. I think all of you guys would agree. 200 pips versus 90 pips or 190 pips, not a big deal, right? Still a big win. And we get so much value over that. But what we don't understand is that this is going to lead to future mistakes if it's not rules-based. Because next time it's going to be 15 pips, then it's going to be 20 pips, and we're going to develop a habit of taking profits early. And that habit is eventually going to kill us because it's going to mess up our risk reward. And when we mess up our risk reward, we sabotage our edge. And for most traders in the market, our edge is so slight. It is so slight. This edge isn't this big, great thing. It is so slight. So any type of sabotage, one mistake, right? It's like watching soccer. You make one mistake and give up a goal. That could be it. It only takes one goal. You make one mistake in basketball. That might be it. So we're saying, going back to the rules, if limit came 2 to 5 pips shy, then I only move 10 pips roll up. Is that better? Actually, I have a 10 to pip. So yeah, so here would be my last question for you. here would be my last question. So if the rule says if price comes 2 to 5 pips shy, then you roll your targets up 10 pips. Would you not roll your targets on every single winning trade? Because in order to win, price has to come 2 to 5 pips before your target. So therefore, every single winning trade would require that you move your targets up, would it not? So there needs to be more to that rule. Does that make sense, guys? Every winning trade, at some point, price is going to come 2 to 5 pips before it, right? It has to in order to win. So every single trade, if that's the rule, why not just have the target there in the first place? Because every trade would require that you move it up. So there needs to be more than that rule. It's not as simple as just saying, hey, if price action comes 2 pips or 5 pips before, I move targets up 10 pips. Another question would be if price is sitting there 5 pips before and you move your targets up 10 pips, would you not just exit at market? Because now your target would be above where price is trading at, right? If price is trading 5 pips before your target and your rule is to move targets up 10 pips, your new target would be 5 pips higher than what price is trading at. So there needs to be more than that. Does that make sense? You need to add some to it. I'm going to be nice here. I'm going to look at gold. But yeah, so because I got a funny comment in the chat. So in order for a continuation down here, we need to see this current level of structure broken, violated, I should say. Excuse me, bad word. If we can violate this level of structure, just like we spoke about before, where are we likely to go to? Well, our next level of structure, which is right down there. Then we can reset the opportunity, look for new shorts. We call this a fresh break. Once we get a fresh break, lower low, lower close, it resets our process. Identify lower low, lower close, predict price is likely to continue lower, decide how we want to execute, and then involve yourself in the trade with an anticipation of a move down to about $1 or $2. So good setup, good talk. There could be a bigger pattern here too, it looks like, just real quick while we're looking at things. I'm going to take a quick peek at gold. So get your question ready for the person who asked it on TradingView. I forgot who it was, but get your question ready. I'm going to take literally a second. I'm going to break my rules of only looking at one pair here. And I will answer a single question for you on gold. So let me know what you want me to answer. Right around there is going to be another Gartley there. But hope that makes sense. Hope you guys learned something from today. I see what you're saying. No, my support level is still valid. The reason I also moved it is also because of bearish rejection and so okay. Yeah. Again, this needs to be rules based. It needs to be rules based. A lot of it, if I were to, and this is a good kind of trick. If I were to ask the traders in my live room if you moving targets sounded more like rule based or fear based, what do you think they would say? They'd say fear based. Yep. So you got the right idea. Just got to tighten it up some. That's it. Just got to tighten it up. I know exactly what you mean. I have rules for not moving targets up, but I have rules for moving stuff to break even. So you got the right idea. Just got to tighten it up. That way there's no room for emotions to get involved, right? Because it sounds like, and you see people typing in, it sounds like you're saying, oh crap, price is almost at my target. We're up 190 pips. I don't want to give it back. That's what it sounds like. But if it's rules based, where it's like if price comes 2 pips before target and puts in, negative candle, and you got to define what negative candles is, then I move stops, blah blah blah. But I would say trust your targets. Trust your targets. Right? You put a lot of work into trusting those to trusting yourself to set up those targets in the first place. Trust them. 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 All right. Gold. What am I looking at on gold? You got I'm gonna give you 10 seconds. I don't really have much on gold, and we're gonna shut the live stream down and continue. Reduce some IPD on pound yen was the request. By the way, hit that like button, guys, if you're on TradingView or YouTube. Show your boy some support. But I'm on gold. I don't know if you're still here. Can you show the trading pattern on gold, please? It's a request, as gold trading is on now, and I would love to see. I wonder if this is the same person from last week. Are you the same person from last week who I yelled at because you were in a trade on gold and you wanted me to tell you that gold was going up and I wouldn't do it? And I said that if you're ever in a trade that doesn't meet your rules of your trade plan, then you should exit the trade. And you tricked me into thinking that you were all in. And then you said, nah, I'm going to stay in it. And now gold's going south. Was that you? Because if it was. But all right. I don't think this person is here anymore. They wanted help on gold. I didn't give it to them. So they went to some other guru who will give them the answer. If you guys missed it last week, we had a situation where it was a really good conversation. I think the title was called Get Out, where if you're ever in a trade that doesn't meet the rules of your trading plan, aka a bad trade, the best thing you can do is get out immediately. And we had a trader that was in a position, had no reason for being in that position, no rules-based reason for being in that position, and was basically looking for whatever, we call it hopium, whatever hope was out there to stay in that position. And usually by hope, it's finding a trader. And if a trader says like, oh yeah, I think gold will go up. Yes, that's all I needed. I needed some reputable person to be on my side because that's the last bit of hope and confidence I needed to stay in the trade. And I'm the wrong person for that. I'm not going to give it to you. I am extremely rules-based. I just broke down a really good trader in YouTube, and I just yelled at him for rules-based. But I wonder if it's the same person. But we had a really good conversation. It was one of those things where it felt like things were going in the right way. It felt like we were kind of making progress, and then at the very end, it kind of went back to normal. It was like, so I'm just going to stay in the trade anyway. And it's like, wasted our time. So I wonder if this is the same person. But I tried. I'm on gold. I got nothing on gold, guys. What am I going to tell you? Like we're coming down to previous structure. We just broke another previous structure. We're overlapping levels or underlapping levels of structure. I've got zero interest in gold here. We're just stuck like Chuck in between support and resistance. So I don't really have much to say, but I tried to be nice. So anyway, I'll see you guys tomorrow, same time, same place for you live streamers. Again, hit that like button on the way out. If you're late, leave any comments below. Same thing on TradingView, and I'll answer them for you. And until next time.